Hello traders, Gary Wagner here. It is approximately 12 noon in Honolulu, 5 o'clock in New York City on Friday, finally, the 17th day of February 2012, and this is the Daily Report for Gold and Silver, our weekend review. We have both gold and silver trading lower on the day today, but when we look at the week, you'll see a different story, close to unchanged, but a little bit higher on the week. We currently have our silver. It's off about a quarter, 25 cents at 33.23, as you can see on the screen. Down about $6 in gold, 17.22 and change. Call it 17.22, 17.23. We are looking at a set of charts. Both charts are in Japanese average Heikin Ashi format. A daily chart in the silver market on the left, on the right, a 720-minute chart, meaning 2 candles per day of the cash gold on the right. I want to start with our 720-minute Heikin chart and look at gold first. As you can see, this week can be absolutely characterized almost by a lack of any kind of real price range in the market. When we take a look at this, you can see that this market has just really formed a base above 1700. There can be no doubt about that. We've gone to test below that area. You can see these marks right in here, I believe 1703, 1706, right in that area. Those were the lows of the week and of the last couple of trading days, call it the last 10 days in trading. But what is really interesting in terms of the characteristics of this particular scenario is it's something that we really haven't seen in quite some time. Now, you can look at other areas where you had a consolidation pattern and try to draw some sort of conclusion or analogy. Even here you had the market really choppy, but not in such a tightly defined range. The only other time that we've seen it over the last couple of months is really back in November after coming off of that secondary high. This is 1802. This is our record top right around 1920. Comes down, moves back up. That's a secondary high. As it comes down, it does in fact form a sideways base for a little while before trading higher, breaking out higher, only then to really test and hit that double bottom. This is the end of the corrective period. Came at the end of December, beginning of January, as we watch this market rally up to a high above 1750. Traders, as you know, my original call for a top of the market was around 1750. My belief is that this market is having some difficulty, and it all really amounts to what is going on fundamentally in Greece. Is there going to be a bailout? How is that going to affect the marketplace, and how is gold going to react in terms of the trading? Because one of the things that we've seen happen with gold over the last couple of months is it's been as much of a risk-on, risk-off trade as it has been a safe haven trade. What really moved gold up as we heard about a resolution with the debt crisis in Greece is the fact that we had the dollar substantially lower. That's what really drew on this market. And traders, to really illustrate that point, how gold has been so dollar driven, I have put up 2 charts. They're both daily charts, both in Japanese average format. On the top, you have spot gold. On the bottom, you have the U.S. dollar index against a basket of 6 different currencies. And really what you can see is as the dollar moved up and hit this top, of course, is really through the mid part of January. What you can see is as that dollar fell, you can see that inverse relationship, almost a mirror image of gold going up. But here's what I'm finding interesting. When the dollar began to recoup, and you can see this over the last week or so in trading, rather than gold going down, there was a lot of bullish sentiment in the market, and you can see that it remained fairly stable. It tells me that there is a lot of demand in the market right now to buy gold. In fact, one of the reports that I had read this morning is that billionaire Paulson right now is recommending that people buy gold. Of course, my belief is he's already got his positions intact, just as George Soros does. They have been really strong buyers of gold all the while especially Soros, talking about how it might be a bad time to buy gold as he repositioned himself, I should say, being long gold. But as you can see, I think that the gold market has held up very, very well when you consider what we have seen in the dollar, with the dollar coming up strongly off of that, and at the same time, gold remaining fairly stable. Now, my belief is this. If, in fact, we see a resolution to the crisis over in Greece in the second bailout package, you're going to see that dollar go down, especially against the euro, which means that you might have some incentive for gold to really spark up. Traders, of course, the big news today, as I'm sure you're well aware of it, is the tremendous rally we witnessed in the equities markets here in the United States. The belief that the economy is getting better. There is some sort of resolution over in Europe in terms of the Greek bailout package. So take a look at this. Currently, we have up our Heikin Ashi, Japanese average chart, daily chart of the cash S&P 500. Of course, that's over 1,300. The Dow Jones Industrial closed just shy of the 13,000 mark. But as you can see, you've followed me long enough to know how we look at the Heikin Ashis, and this candle itself, this Heikin candle, it's got a tremendously large range. Compare that to what's gone on prior. You can see that it's broken out and closed above this top. And when we take a look at our former top right in here, you can see we are right at that point. So it's real interesting. Where could this market go if this rally continues, which I believe there's a substantial opportunity for that to happen. And really to do that, what we've really got to do is really compress this on the daily so we can go back and look at some of these record tops. This is 07 and 08, before the major fall, before the banking crisis that we had. And when we follow some of the tops and kind of draw them over, you'll see the different areas of resistance that we could come up with. And I'm just looking at these levels simply by drawing a line from the various tops that we have had. And let me just go ahead and put this last one here. This would represent 15,000. As you can see, we are right at a fairly critical point because we're just approaching this first top. This is the top that we received at the beginning of 2011 before the market fell. If it can break through there, the next real point on the S&P is going to be around 1440, but an incredible, incredible move in the Standard & Poor's. And traders, the last market that we want to cover today, of course, is silver. Silver has been kind of in the doldrums, especially over this last week, trading around 33.22. That's the close on the day and on the week. Daily on the right, weekly Heikin Ashi on the left. Interesting thing is, even though this market closed lower on the week, the Heikin, because it's a lagging indicator, is still giving us on the weekly a green candle. However, very small body, and it's almost doji-like. That in the face of these tremendously large moves, as we witness this market at the beginning of this rally moving from a low of $26 to a high of about $34, a $6 move in silver. Very, very substantial move. Is the move over? We'll have to see. But when we look at the daily chart, and my daily viewers know that all week we have been talking about a couple of things. One, there seems to be really, really strong support just below $33 per ounce, $32.90, and of course our stop is below $32.80, and that's the reason where our stop is there. And of course we're long at $28.10. So we've gotten a pretty large portion of the move. Even in fact, if it comes down and stops us out at this point, we've got a tremendous profit in the market. When you look at this, the one thing that we notice all throughout the week is this rounded top, and it's the rounded top that has had me concerned. Well, why? When we take a look at historical rounded tops, especially in silver, it usually has come just preceding the market dropping down. These rounded tops give us some sort of an indication, because as the market's moving up, you don't get that kind of a rounded top. You get a succession of higher highs. You'll get a succession in a true rally of these higher lows also. But as the market comes up and it makes its high, you get this kind of a rounded top where you start getting, rather than higher highs, you're getting lower highs. And you can see that kind of a rounded top here, and we're witnessing that also here. The question is, are we going to get some kind of a rounded top, it finds its base and then begins to trade higher, or is the market going to start moving lower? My sentiment is this: on a fundamental basis, if in fact we see the equities markets begin to move up, if we see a renewed belief, a market sentiment that the economies are going to get better, you are going to see a positive reaction or a bullish sentiment build in silver. Why? It is an industrial metal. That's part of the allure of silver and the difference between that and gold. We'll have to see where it wants to go. We have a great position, so we're just going to maintain that, just as in gold. We're just going to maintain our stops, see where the market wants to take us, and collect our profits wherever they end up being. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another daily update, and bye-bye.